Hey folks, Tuesday the 5th of July 2022. Welcome back from Independence Day, 4th of July yesterday. Hope everyone had a good one. So what we've come back to this morning is a lot of weakness in European equities. We've had a pretty positive services and composite figures out of the Eurozone today. Composite coming in 52, even above 51.9 expectation, below prior 54.8, and services 53, beat on 52.8, in line in Germany. But what we have through the rest of the docket for the US session, we've got factory orders at 3 o'clock. And that's really the height of it. Of course, we do have NFP this Friday. I won't be on the desk. I'll be off to my holidays as of Thursday morning. So back on Monday, the 18th of July, back here. So let's go over, have a look at these charts. Really want to look at oil and want to look at the dollar. And I want to look at the S&P here, and actually nat gas as well, because we're going to be talking a lot. The markets are going to be talking a lot about nat gas over the next probably 5 days coming into July 11th. And the reason for that is we have Nord Stream 1 coming offline for servicing on July 11th. Couldn't really come at a worse time, whereby Europe is extremely vulnerable, basically, to Russian supply of gas. We don't have supplies coming from the US to Europe at the moment. So you really gotta be careful out here trading that gas at the moment. So let's get over to these charts and have a look right now. Okay, so nat gas. I'll just blow this up here and we'll get this out of the way. Nat gas, we had this gap, debatable about this gap or not, but there is a gap here in yellow. Top of the gap, 5 spot 653s on Henry Hub Q22 contract. Nice bids here this morning. We were looking at this trade. Nice for the brave, looking at 6 spot 014s to the upside. Very tricky though, with supplies very much kept onshore in the US at the moment, with the Freeport LNG terminal out of action. So therefore, domestic supply is a wash at the moment in the US. But a totally different picture to what we see in Europe, where we're up 700% on European gas futures at the moment. So, and that's on the year. So, and I think that's set to continue to rise. So, really a tale of two worlds. But I think generally the trade here is to be looking at the longs in nat gas. I think generally it is just too cheap down here for the environment we have. Once we get Freeport back up online, here are the daily bars. You're just going to see this thing absolutely go parabolic again, and get those shipments back out to the European Union. So that's nat gas, long and short of it. But equities this morning under pressure. Let's really look at the main culprit here, which is the Dixie, hitting the new highs on the year. 105 spot 86 is that market. To guess where this thing is going, we've really done a Fibonacci projection here. Now, this is a slightly complex chart here that we're looking at. Probably tidy it up just a wee bit, there, to show you the fib extension is from basically the lows that we had in Feb 2018. Just I'll get my highlighter working here, to the highs that we've seen in 2020, and then the pullback to the lows in 2021. Now that gives us a fib extension target up of 107.44s. I will be looking to use that level should we come up there, to see is this where the Dixie is going to hold up. Now that's quite a move from where we are already. Like at market 2 there is a 1.5% move up. So if you're an FX trader, these are golden times to be trading FX paired currencies, or dollarized paired currencies. Kiwi dollar, peso dollar, Swissy dollar, name it, just name it. Really good trades to be done here. All right, euro obviously getting decimated down, and that, big story in the FX space really. But largely, you're seeing on like TNotes, for example, here, this is weekly bars on the US 10-year. And you're seeing we have this trend really that goes back here. Let me just make this a bit more obvious. Trend goes back to the lows of 2013, actually, here, and then the lows of 2018. And we're trading right at that right now. I think it's an interesting spot. We have seen bids into the risk off trade this morning. Or equities down, bonds up, gold. No one cares. I think there's been an interesting article in Refinitiv that I've posted in the room this morning talking about the commodities trade and how you shouldn't really jump into the concept that the commodities cycle, boom cycle, is over. It's more hyper specific than that. Metals versus grains versus oil and energy. They're all kind of diverging a little bit, and I would say oil and energy and your grains and ags are more tied together, and you've got metals that really are actually in an oversupplied situation, I think, at this time. A lot of people jumping on the inflationary trade for gold. It never happened. Yes, inflation happened, but the trade on gold didn't happen. I think, funnily enough, I'd say the inflationary trade on the metals and gold as a haven trade actually happened in the last cycle from the global financial crisis, and when we actually didn't get the inflation that we were expecting. So, think of that what you will. Anyway, I'm going to shut up about all that macro stuff, and we'll just look at the SPOOs. How do we make money on the SPOOs today, Tim? Well, this is not trading or investment advice. I'm just providing you as best context read on the market as I can. And so it looks like we've pulled back to a nice little area, 38.09's quarter. We've talked about this level a lot, right, recently. So I like the buyers from here. I do. I like the buyers from here. Should we really, I'll get rid of that. Should we close below here and stay below here coming into the US market? I think, yeah, all right, that means that we're just rejecting here and we're going to head off down. But 20 EMA resides just above the highs of this electronic session so far for the SPOOs. So I think, a little reversal here and push back up. If we can't hold 38.09's quarter, I think we're going to, essentially just break this trend that we have on the daily bars on the right hand side of your screen. And we're going to be looking to trade down to the 36.17 halves probably this week. But that's quite a move for this market. That would officially be 5% down from where we currently trade right now. Okay, so are we going to have a 5% down week on the SPOOs? Who knows? We're set to get the minutes from the prior meeting this week from the FOMC. We're not looking for the rate adjustment this week, but NFP to come on Friday. You could see some green shoots for a positive economy this Friday. And I think, with that, the bids might be back in. Reading commentary from a couple of really good traders that I follow on Twitter who are in the business 20, some of them 50 years plus, actually, saying that they've never seen the equities market so, like in terms of the sentiment, so skewed to the downside, that actually the expectations are so bearish that the market will just basically put on a massive short squeeze and lift all these sellers out of it, So with that, we'll be looking at the VIX live during the session, and we'll do our usual VIX hypo session pre-market for the guys in the room. All right. So I like the longs on equities. Should we hold some of these supports that we're just trading above? I think it's a very difficult picture. So let's see where we sit on the open. And of course, all the best trading really coming from the open on US equities and that 3 o'clock marker as well. So, all right, that's it for me for another pre-US session. I hope you have a good day. I will see you tomorrow morning, and be careful out there. Cheers.